Hello friends. Friends, we'll continue with cash flow statement, right? So in cash flow statement, we have studied three activities. And in the very beginning of the chapter, I told you that we will prepare cash flow from three activities, right? The first one is operating activity, right? The second one is investing activity. Clear? And what is the third one? Third one is financing activities. Right? And we have discussed all these three activities in detail. Clear? This is all about the cash flow statement. If you know how to calculate cash flow under these three activities separately, then you can combine these three activities and find out the net increase or decrease in cash and cash equivalents. Right? That is, now how we write this? First of all, we say, if you get the question, combined question, first of all, you will say A part is your cash flow from operating activities. Clear? You know how to calculate cash flow from operating activities, right? B part will be cash flow from investing activities. Clear? Then C part will be cash flow from financing activities. Clear? You all know how to calculate cash flow under these three activities: operating, investing and financing. Now this net amount we will say as net increase. In bracket we'll write decrease, that is if it is a negative cash flow, in cash and cash equivalents. Right? So this is the net flow of cash and cash equivalents. Right? And this cash and cash equivalents, what we have calculated is what is the flow of cash during the year. Right? This all is during current year. Right? This is what is our cash flow, whether it is a cash inflow or cash outflow. What is our cash flow during the current year? In this we will add cash and cash equivalents in beginning of the year. Clear? This is what we have earned during the year. This is at the beginning of the year. So what we will get is cash and cash equivalents at the end of year. Cash and cash equivalents at the end of year. Clear, friends? So this is all about the cash flow statement. We have done cash flow from operating activities. You know how to prepare cash flow from operating activities. You know what are the items to be covered while calculating cash flow from operating activities. Then you know what is the cash flow from investing activities, and you know what is the cash flow from financing activities. The net increase or decrease in cash and cash equivalents during the current year, we will get that in that we will add back cash and cash equivalents in the beginning of the year, right? And what we will get is finally the cash and cash equivalents at the end of the year. Clear? So let's do one practical problem on this involving all the three activities. I will take up a simple practical problem because we have done everything in detail. So I will ask you people to do the complex problems, right? If you face any queries, I'm there to help you out. I'll be taking up the simple problem. You guys will do the complex problems on your own because you know how to treat each and every item under the different activities, right? So this is for your practice. Clear? I will do a simple problem. Simple problem I am doing just to show you how to prepare this cash flow statement. Clear? From the following information, prepare cash flow statement for the year ended 31st March 2016. Opening cash balance is 10,000, closing cash balance is 12,000. Then we are given decrease in trade receivables, increase in trade payables, sale of fixed asset, redemption of debentures and net profit for the year before tax. Right? Let's prepare this. I'll say cash flow statement right? You will say cash flow statement for the year ended March 2016. This is what the requirement is, right? Now, we'll start with operating activities. I'll say cash flow from operating activities, right? Now, you know the format of cash flow from operating activities. What is the first thing that you need? Net profit before taxes and extraordinary items. We are given net profit for the year before tax. We are given directly the figure of net profit before tax, that is 20,000. So we will take net profit before taxes. This comes to 20,000. Clear? Then what we do is adjustment of non-cash and non-operating items, isn't it? This is the second thing in this. First is net profit, then from this net profit we adjust non-cash and non-operating items. Now let's see if you have any non-cash and non-operating items. Cash balance, no. Trade receivables, no. Trade payables, no. Sale of fixed asset. Sale of fixed asset for 20,000, no. Redemption of debentures, no. Net profit, we have already taken. So there is nothing related to the non-cash and non-operating items, right? Then we do adjustment of working capital changes, isn't it? Do we have any working capital changes? Cash balance, no. Trade receivables, yes, it is a sundry debtors. It is an asset. There is a decrease in the trade receivables. There is a decrease in the current asset. Now, what does this mean? I have told you the thumb rule that current assets move in opposite direction and current liabilities move in the same direction. That means if there is a decrease in the current assets, we will add this back, and if there is a increase in the current assets, we will subtract. So now there is a decrease in the current assets move in the opposite direction, we will add back decrease in trade receivables. I'll say add decrease in trade receivables. Clear? What is the decrease? This is 5,000. Clear? So I am adding this back. Clear, friends? Everything will be related to what we have studied so far in the last 15 lectures. Everything is related to that. Nothing will be out of that. Right? So then you have increase in trade payables. This is our sundry creditors, isn't it? This is our current liability, and the thumb rule says current liabilities move in the same direction. If there is an increase in the current liability, we will add this back. Here it is increase in trade payables of 7,000. So that means we will add back increase in trade payable. How much it is? 7,000. Now let's see if you have anything else. If you have anything else related to operating activities. Cash balances, this we will not take. Trade receivables, payables we have taken. Fixed asset, not related to operating activities. Debentures, not related to operating activities. Net profit we have taken. So nothing is left. I can say this is my, whatever the net amount I get, I can say this is my cash flow from operating activities. Clear? Is this clear? This comes to 32,000. So 32,000 is my cash flow from operating activities. Clear? Now, second part. Cash flow from investing activities. Clear? So cash flow from investing activities, cash balance we have taken, receivables we have taken, payables we have taken, sale of fixed asset, right? What are the investing activities? Activities related to sale and purchase of fixed assets and long-term investments. So sale of fixed asset 20,000 is an investment activity, investing activity. So if there is a sale, the money is coming in, there is a cash inflow. So sale of fixed asset, there is only one item related to investing activity. This is 20,000. Clear? Now, C part, cash flow from financing activities. Clear? Now, let's see what you have related to cash flow from financing activities. Redemption of debentures, 50,000. We have redeemed the debentures, we have paid the money back to the people from whom we have borrowed the money. We have paid back the money. We are paying the money, that is a cash outflow. Right? So I will say redemption of debentures. Right? This is 50,000. So my cash flow, this is negative 50,000. This is from investing activity. I will say cash flow from financing activity is negative 50,000. Clear? Now, what is the net effect of these three activities is what we call as net increase, or in bracket you will say decrease in cash and cash equivalents. Right? This net amount comes to 2000, and in this I told you we'll add back cash and cash equivalents in the beginning. What are the cash and cash equivalents in the beginning? We are given the opening cash balance of 10,000. So this is 10,000. This 2,000 reflects the cash flow during the year, and in the beginning of the year we have a cash balance of 10,000. So what is the cash balance at the end of the year? Cash and cash equivalents at end of year. This comes to 12,000. Clear, friends? So this is how you are going to prepare the cash flow statement in exam. Right? This is a very, very simple problem that I have taken up. You might get complex problems in examinations. So I suggest you must thoroughly go through the videos in which we have covered the individual topics, individual activities. You should be clear about the concepts, how to calculate cash flow from operating activities. You should be clear about how to calculate cash flow from investing activities. You should be clear about the concept how to calculate cash flow from financing activities. Then you can prepare the combined cash flow by combining all these three activities. Right? So let's quickly have a recap of the whole chapter, that is all the three activities. Let's have a quick recap. Right? With this we will finish this chapter. Right? Operating activities. What are the major items in operating activities? The first item we require is net profit before taxes and extraordinary items. Clear? Clear, friends? The second thing we need is non-cash and non-operating items. Examples of this is depreciation, right? Goodwill, amortization, then gain or loss on sale of fixed assets. Clear? So this is the non-cash and non-operating items. Here we discuss two conditions. The first is to identify whether the item is operating or not. The second thing is whether that item involves the actual cash inflow or outflow or not. Clear? So this is how we adjust the non-cash and non-operating items, right? Then third step is, what is the third step? Working capital changes, right? In working capital changes, we have two things. We have the current assets and the current liabilities, right? This current assets move in opposite direction and current liabilities move in same direction, right? What does this mean? Increase in current asset will be subtracted, right? And decrease in current asset will be added. For the current liabilities, they move in same direction. That increase in current liability will be added and decrease in current liability will be subtracted. Clear? So these are the working capital changes. After this, what we get is net flow from operations, and in this, from this we will subtract taxes relating to operations. Clear? Then after this we add or subtract extraordinary items. If this is an income, we will add back. If this is an expense, we will subtract. Clear, friends? So this is how we deal with cash flow from operating activities. If we talk of investing activities, our investing activities deal with basically two things. I can say purchase and sale of fixed assets and long-term investments, right? So we have discussed the cash flow in case of purchase and sale of fixed assets and the long-term investments. This also includes loans and advances given. Loans and advances given and their repayment, right? And what you have to do carefully in investing activity is preparation of fixed asset account, right? So this is one important point here, preparation of fixed asset account, right? Then talking of financing activities, if we talk of financing activities, basically these activities directly relate to the finances we are in. We need finances, we are in need of money. Clear? So how we can borrow this money? I told you there are three ways. One is the share capital, the other one is debentures and loan from bank. So there are three methods. Any cash flow related to these three things we will cover under the financing activity, whether it is redemption of debentures, whether it is issue of debentures, whether it is the dividend given on share capital, interest paid on debentures, interest paid to bank for the loan taken from bank. Clear? So everything will be covered in financing activities. Clear, friends? So I've tried my best to cover all the topics of cash flow statement, right? If you have any queries, any question you want to ask or any question you find difficult, you can send me the image of the question at ksjteaching@gmail.com. Right? If you send the image of the question, friends, do specify the area in which you are facing the problem, because I can then focus on that area particularly. Right? Clear? So with this we finish cash flow statement. In the next lecture, I'll be moving on to again the partnership thing, because we are left with one chapter. This cash flow statement I did because I got a request from few students to cover cash flow first. They were finding it difficult and exams were approaching, right? So in the next lecture, I'll be moving to dissolution of partnership firm. Dissolution of partnership firm, right? So we'll shift our focus again to partnership from the next lecture. With this last chapter of partnership dissolution, we will wrap up the partnership thing, right? So that's all for this lecture, friends. Thank you so much.